Before August isn't a made-up deadline for most of this list. For 2 items on it, there's an actual dated mechanism sitting behind that timing, down to the week. For the rest, August isn't a cliff edge so much as the point where a slower-moving trend that's been building all year finally catches up to the price tag. Both of those are worth knowing before you shop this week, and they're not the same kind of urgency. Picture 12 items on a shelf, and imagine a calendar running behind each one. For a couple of these, that calendar has a specific date circled on it, tied directly to a USDA research finding about how long it takes an event to reach a retail shelf. For the rest, the calendar is just ticking steadily forward on a trend that's been visible for months. Knowing which is which changes whether buy it before August is a specific time-sensitive call or just a general nudge to stop putting it off. 12 items, checked against USDA, BLS, and trade data. Least urgent to most. Let's start with the one item on this whole list where August genuinely changes nothing. Number 12, butter. Here's the one that just doesn't care what month it is. No hidden catch, no seasonal window closing, just straightforward oversupply. Global milk production is up across nearly every major dairy exporting country at once, and butter has taken one of the sharpest hits from that, down roughly 8% in recent trade data, with USDA cutting its own 2026 forecast by 30 cents a pound in a single month. Picture a price line running flat and low straight through the summer, with nothing on the horizon to interrupt it. Dairy output can scale up in months when conditions are favorable, which is exactly why this correction landed so fast and shows no sign of reversing before August, September, or any month after that. If there's a buy it whenever, the timing genuinely doesn't matter. Item on this whole list. This is it. Butter freezes for months without real quality loss. And unlike almost everything else here, there's no clock running underneath this one at all. Number 11. Canned tomatoes and tomato paste. Most households would reasonably assume canned tomatoes are riding the same wave hitting fresh tomatoes right now. Tariffs near 17% on Mexican imports, freeze damage across Florida, wholesale prices at their highest in a quarter century. Heading into peak summer cooking season, that would be a real concern if it applied here too. It mostly doesn't. Processing tomatoes, the variety that ends up canned or turned into paste, are largely grown in California's Central Valley on a completely different calendar than the fresh tomatoes getting hit by tariffs and freezes. An analyst tracking the produce market said plainly that processing tomatoes haven't been affected the way fresh ones have. Picture two supply chains running side by side, one under real pressure, one almost entirely insulated from it, both stacked on the same shelf. If canned tomatoes are part of your regular cooking, August changes nothing here. This is one of the more genuinely safe buys on this whole list, any month you check it. Number 10. Rice. You've probably seen rice described as one of the safest categories in the store right now, and globally, that's accurate. India lifted its export restrictions, Asian harvests came in strong, and prices are down 35% from the 2023 peak, with U.S. ending stocks at their highest level since 1985/86. Here's what that global calm doesn't show. American long-grain rice acreage is genuinely shrinking. Arkansas, the country's largest rice-growing state, cutting to just 900,000 acres, the lowest since 1987, driven by low prices and high input costs rather than weather. USDA's own forecast has 2026/27 U.S. long-grain production down 20% year over year, the lowest since 2011/12. Picture two bags on the same shelf, one from an abundant global supply, one grown by a farmer who might not plant this crop again next year. This isn't an August story specifically. It's a slower structural shift that plays out over planting seasons, not weeks. If domestically grown rice matters to your household, there's no urgent reason tied to next month, but the longer-term trend is real. A protein category nearby is facing a much more calendar-specific kind of pressure. Number 9. Chicken, especially wings. At first glance, this looks like it belongs on the calm half of this list, and mostly, it does. Broiler production is climbing to 49.15 billion pounds this year, and prices are actually forecast slightly lower. Picture a nearly flat line running across the whole year for chicken breast and thighs. Genuinely one of the calmer charts checked for this entire list. But wings specifically don't follow that line, and this is exactly where August matters more than any other month. Wings carry a wildly disproportionate share of consumer demand relative to how little of the bird they physically are. And that mismatch means wing pricing spikes hard around any high-demand stretch. And late summer grilling season, running right through August, is one of the biggest demand windows of the entire year for this specific cut. The bird is fine all year. Wings specifically get squeezed exactly when backyard cookout season peaks. If wings are part of your August plans, this is worth buying ahead of the demand spike rather than during it. Number 8. Arabica coffee. Brazil's 2026/27 crop is projected as high as 75 million bags, the largest global surplus in 6 years, according to several analysts. And prices have fallen for 5 straight weeks to an 18-month low. Picture a line chart sliding steadily downward for over a month straight. Right now, in July, this is the cleanest relief story on the entire list. Here's why that window doesn't necessarily last through August and beyond. Shipping costs tied to the Strait of Hormuz closure are adding real expense to importers and roasters, regardless of what the beans cost at origin. And no AA is currently putting real odds on El Niño conditions forming later this year. The same pattern that's previously delayed the rains Brazilian coffee trees need to flower, deciding next year's crop. This year's harvest is already decided and priced in. The risk building for the back half of the year is separate from what's driving today's low price. If coffee is a daily non-negotiable, this current low is worth taking advantage of now, because the surplus pricing you're seeing this week isn't guaranteed to hold once shipping costs and weather risk work further into the picture. Number 7. Cocoa and dark chocolate. Cocoa hit an all-time high above $12,900 a metric ton in December 2024. It's down more than 70% since. Picture a chart with a sharp spike on the left and a long, steep slide taking up most of the page, one of the sharpest commodity corrections in recent memory, driven by genuinely improved rainfall across Côte d'Ivoire and Ghana. Here's what most people miss about that correction. A real share of the price drop came from manufacturers using less cocoa, not just more cocoa existing. European grinding fell over 7% year over year. Asian grinding collapsed 16%. And underneath the current calm, early surveys for the next West African harvest are already flagging weak pod formation, with the same El Niño risk sitting on the calendar as coffee's. This isn't an August-specific trigger so much as a slow fuse that's already lit. Chocolate bars that jumped from $2 to $4 or $5 over the past 2 years aren't reversing just because the commodity did. That increase is the new baseline, regardless of which way cocoa futures move from here. If chocolate or baking cocoa is a pantry regular, there's no reason tied to next month specifically, but the correction you're seeing today isn't a guarantee about where this goes next. Number 6. Pure honey. This is the one that fooled me a little during the research, because the top-line number looks like genuine relief. U.S. beekeepers lost 55.6% of managed colonies in 2024 to 25, the worst rate since the national survey began in 2010. This year's number, 39.9%, a real improvement. Picture a bar chart with last year's bar nearly at the top of the page and this year's noticeably shorter. Real progress, worth showing, honestly. Here's what that chart hides. The president of the American Honey Producers Association put it plainly, losing 40% of colonies in a year isn't a victory. It's the same crisis running slower. Beekeepers aren't expanding. They're replacing losses as fast as they can, like running on a treadmill that never lets them get ahead. There's no specific August mechanism here. This is a year-round fragility rather than a dated event. If honey is a pantry regular, this is worth a light watch regardless of the month, because the underlying supply chain has shown twice in 3 years how quickly a good season can turn into a rough one. Notice the shift starting here. Everything up to this point has been either genuinely calm or a slow building trend with no specific date attached. The next three items are different. Each one has an actual mechanism with a real clock running on it. Number 5. Frozen vegetables. Here's where the calendar actually starts to matter. USDA has fresh vegetables up 3.1% in a single month, with 7.8% projected for the full year. One of the fastest moving categories in the entire outlook. Frozen draws from the same fields as fresh, so it eventually absorbs the same pressure. Just later, picture a conveyor belt that started moving back in the spring, carrying an energy-driven cost increase toward the freezer case, one slow step at a time. Every stage of the cold chain runs on electricity, flash freezing, refrigerated trucking, a freezer case running around the clock. And that cost takes 3 to 6 months to travel the length of that belt before it reaches a shelf price. Energy costs that moved earlier this year are, by that documented timeline, arriving right around now. The bag in your freezer today reflects a decision made months ago. If frozen vegetables are a household staple, this is one of the more calendar-specific items on this list. Not a forecast, but a cost that's already most of the way down the belt. Number 4. Canned tuna. Here's one where I want to be careful not to overstate the timing. Roughly 55 to 60% of the tuna that ends up in an American can moves through Southeast Asia, a corridor sitting under real, active tariff pressure, with some country-specific proposals running into the mid-40% range. That's a documented structural vulnerability on a product where import dependence exceeds 85% of total domestic supply. Picture a bridge with a weight limit sign posted on it that hasn't actually been tested by a heavy truck yet. The sign is real. The bridge hasn't failed. Both facts matter equally, and neither one is tied to a specific August date. What hasn't happened yet, according to the pricing data available right now, is a confirmed broad retail increase tied specifically to that exposure. If tuna is part of your weekly rotation, this is worth watching rather than reacting to on any particular timeline. Real risk, without a confirmed price move or a dated trigger to point to just yet. The next two items don't have that luxury of ambiguity. Number 3. Extra virgin olive oil. Imagine a warehouse that looks completely full from the loading dock, but walk to the back and 3/4 of it is already empty. That's close to what's actually happening in Spain right now, and this is one of the two items on this entire list where August specifically is the month that matters most. The price looks like relief. Spain produces roughly 40% of the world's olive oil. This season's harvest genuinely recovered after 2 brutal years, and prices dropped from an $11 per kilo peak in 2024 to around $7.66 today. A shopper checking that number alone would reasonably conclude this market has settled down. Here's what that shopper can't see. Spanish industry data from May shows nearly 70% of this season's entire production already sold and shipped, leaving thinner reserves than expected right as peak summer demand hits. And Mediterranean tourism and hospitality use peaks precisely in July and August, the exact window this reserve now has to stretch through. Early field data for next year's crop is already flagging weaker flowering too. Picture the warehouse looking calm right up until someone actually checks how much is left in the back. In the exact month demand is heaviest. If olive oil is a kitchen staple, this is the item most likely to move without much warning specifically this August, because the thin reserve and the peak demand month are landing at the same time. Number 2. Eggs. Of everything on this list, this is the one with the most precisely dated mechanism behind it. Retail egg prices are down 35.2% year over year as of May, a real collapse from the record $6.23 peak down to about $2.19. Genuinely the best egg news checked for this entire list. Picture a line chart falling off a cliff starting in early 2025 and staying low into this spring. Here's the part that turns this into an August-specific story rather than a general one. New HPAI detections were confirmed across 12 states in June, And USDA's own research on this outbreak shows retail prices typically move within 6 to 8 weeks of a depopulation event. A documented lag, not a guess. Count 6 to 8 weeks forward from June, and that window lands right in the middle of August. This exact swing already happened once this year in Pennsylvania. Months of relief, reversed by a single outbreak, then recovered once contained. Think of egg prices like a smoke detector that's quiet right now, in a house where the alarm has already gone off twice this year, sitting in a room where a fire started again in June. If eggs are a weekly buy, this is the most concretely dated item on this entire list. Not a maybe, but a documented lag window that lands almost exactly on the month in this headline. Number 1. Ground beef. Picture a timeline stretching all the way from 1951 to today. The U.S. cattle herd right now, at 86.2 million head, is smaller than it's been at any point across that entire 75-year span, since the year before Eisenhower took office. Every other item on this list has some relationship to a specific month or a specific event. This one doesn't need one, and that's exactly why it closes this video. Here's what a shopper actually experiences. The same package costing a little more every single time they come back, in July, in August, and every month after that. Beef and veal prices are up 12.9% year over year. Wholesale beef is at all-time highs for this point in the season, and USDA's own forecast points to another 7 to 9% increase before the year closes. Picture a line chart that's been climbing for 8 straight years without a single meaningful pullback. No other item on this list has a chart shaped like that, and no single month changes its direction. A calf conceived today needs roughly 9 months of gestation, then 18 to 24 months of growth, before it ever reaches a store, meaning any rebuild decision made right now doesn't land until 2028 at the earliest. Layer on top of that the U.S. border closure to Mexican cattle imports in May 2025, cutting off a supply line that had accounted for roughly 62% of U.S. cattle imports in prior years. Any calf conceived today doesn't reach your grocery store until 2028. Eggs have a specific August mechanism. Olive oil has a specific August mechanism. Ground beef doesn't need one. It's been climbing every single month for 8 years straight, and August is just one more month on a chart that was never going to turn around on its own. 12 items, and the honest pattern here is that before August means something different for almost every single one of them. Butter and canned tomatoes don't care what month it is at all. Rice, cocoa, and honey are slower structural stories playing out over seasons, not weeks. Frozen vegetables and wings are riding real calendar-specific pressure, one from an energy cost lag finishing its trip through the cold chain, one from peak grilling season, and eggs and olive oil are the 2 items on this list with an actual dated mechanism landing close to this exact month, while ground beef simply doesn't need a calendar at all, because it's been climbing every month for 8 straight years. That's the real value in checking the data instead of just trusting a deadline in a headline. Some of these urgent-sounding timelines are genuinely precise, and some of them are just a general nudge dressed up as a deadline. Knowing which is what actually determines whether buying this week saves you money or just fills a shelf a little early. Which of these 12 hit closest to home for you? Drop it in the comments. I read every one.